Welcome to the podcast. I'm Eric Salzman, joined by Richie Bennett and Kevin Doherty. Kevin, let's get right to you. Let's have a quick crypto update.
Sure. Well, at the time of recording, Bitcoin is trading just a touch over $87,000. And interestingly, that's down about 7%, roughly 7% for the year. So from January 1st. And that is not what most people were expecting for this year because we had all the positive tailwinds from the uh, changed regulatory posture in the US from being outright hostile to openly supportive. And we've seen the institutionalization accelerate and buying by large institutional investors and Wall Street doing more and more in crypto. Nevertheless, it's down on the year, which is, as I said, unexpected. But looking forward into next year, I think the main thing that people are looking at is will there be a liquidity driven support for crypto, Bitcoin, and the wider space?
Now,
And
Kevin, let me just ask a question because
yeah,
so let's talk, maybe explain liquidity a little bit. Like liquidity could mean trading liquidity that there's deep markets, or is it a financing type thing? What exactly are you talking about when you say liquidity?
generally, what the crypto people talk about is how much liquidity is there in financial markets. And with things like interest rates, lower the rates, they'll look at M2 in the US and China, especially, but also just global aggregates. And it's basically how much money is there sloshing around the system.
Mhm.
Because historically, there's been a pretty strong correlation between the Bitcoin price and whether liquidity is abundant or tight. And so,
Mhm.
with the Fed now cutting rates recently, and an expectation of more liquidity and injected into financial markets, they were doing quantitative tightening, and now that's ended, and they've gone right back to a sort of form of quantitative easing, which is a way of putting cash into financial markets. And the
Right.
assumption is that that's very supportive for
Right.
Bitcoin.
Just if people, for people who aren't familiar with this, so quantitative easing was the Fed policy where they basically went out and bought trillions of dollars of agency mortgage-backed securities and U.S. Treasuries with maturities anywhere from to the long bond, 2 years as well. And that built the Fed's balance sheet. So before 2008, the Fed's balance sheet was something like 700 billion or something like that, but well below a trillion. And the two big rounds of quantitative easing that they did, the first one, post the great financial crisis, and then COVID, they got their balance sheet of mortgages and treasuries up to about 8.7 trillion. So that injected money directly into the system, put it right to the banks and increased bank reserves, and that was huge amounts of liquidity. And then quantitative tightening is the reversal of that, which they're not selling, but they were not reinvesting. So when a maturity when a treasury bond or note that they held matured, that's it, it's gone. When a mortgage-backed security pays down its regular principal plus any prepayments, that's gone. They're not reinvesting that. So that was quantitative tightening, and that was taking liquidity out of the system. And now what you're saying is they're kind of doing a quasi quantitative easing to kind of put liquidity back in because things were getting very tight in the financial markets.
That's right. And that's US focused. Now, the other big leg in the stool of global liquidity is China. And especially in the crypto market, people pay close attention to all of those financial plumbing dynamics coming out of China. Again, historically, that's been a big support for the market. Now, last week, China had its big annual economic conference, the Communist Party led. So it's a China, what is it, the Economic Work Conference. And it sets the policy agenda for the coming year. And there was, I'd say hope is a better word than expectation, but there was a hope that because of the stagnant economy in China, that the government would announce that it was also going to be turning on the liquidity taps which is something that they've done many times in the past.
Hmm.
And they didn't do that at the conference. And so this is something that bears watching and monitoring very closely going forward. Basically, the leadership in China understands that they have some big economic problems that need to be tackled, but they're really reluctant to do a just a general liquidity fire hose to deal with those problems for a number of reasons, but they don't want to reinflate any bubbles. And they also, certainly under Xi Jinping, want to control what happens in the economy. He really, really wants control. And so he said, if we target investment towards these certain areas like AI, like vehicles, autonomous vehicles, other robotics, these national priorities, he would much rather do that than just say, you know what, screw it, let's dump liquidity into the markets and
Right.
that'll sort the problem out. So
So, Kevin,
that's
do you think that's the recent last couple of days now? Bitcoin's down,
yeah.
all the cryptocurrencies are down. Do you think that's the reaction to
I think it's part of it because I know a lot of people in the crypto community were really had their eye on any announcements coming out of China that would indicate that there's more liquidity coming next year. Now, the Chinese central bank has already been injecting a lot of liquidity in the markets over this past year. So it's not like they've been restrictive, but they just haven't been super accommodating. But despite that, so I think it's worth talking a little bit about China. And it's something the two things I follow most closely are crypto and China. And the economy there is really stagnant, frankly. Nobody trusts the numbers coming out of China, but even the official numbers, the official economic releases, all show weakening trends. And the question is, will the policies, these targeted policies that the government wants to implement rather than a generalized liquidity injection, will that work or not? Many people are skeptical that those policies are going to work because it's basically more of the same of what they've been doing post-COVID. And I'll tell an interesting anecdote. A good friend of mine went to business school in China about a decade ago, and his career's there. He's completely localized, speaks the language, married to a Chinese woman. And he was one of the best business schools in the country. And I had lunch with him a couple months ago. And he said that half of his graduating class of that business school, so again, business school in China, half the graduating class right now is either in jail or they're forbidden from leaving the country. And what that means in that system, when you're forbidden from leaving the country, that means you're under investigation and you're on your way to jail in the next few months. And the problem that there's been this massive crackdown by the government that's basically started when Xi Jinping came to power, over a decade ago. And it's really having an impact on business people. And the way my friend described it, he said anybody who can leave right now, and he means any entrepreneur, any one with wealth. He said anyone who can leave is leaving.
Is it a broad variety of charges, or what's the main
Yeah,
charge?
well, it's interesting. All the charges boil down to corruption, and he explained that the way it works and with the people he knows is so at his business school, the vast majority of people after business school, they start a company. So it's very, very heavily focused on entrepreneurship, which is different. US business schools, most of the graduates go into finance or consulting. In China, everyone wants to be an entrepreneur and be the next big thing. But in order to operate there, you have to get certain approvals from local party officials in order to get credits, investments. It's the system is quite corrupt and quite controlling. And so, these are business people doing legitimate businesses, but they've had to do a few illegitimate things in order to get set up and operate. And those people are being dragged into this. So the local corrupt government officials are being arrested, and then the people who have given payoffs to the local government officials are being arrested too. So the analogy I think makes sense is in the 1970s in New York, let's say in the garment district, all of those companies had to pay money to the mafia, had to pay protection money to the mafia, right? And the FBI came in and really went after the mafia to try and clean things up. But they didn't arrest the local business people who were given payoffs to the mafia because they're caught up in the system. In China, they're arresting those people too. And so as a result, there's just been this exodus of the entrepreneurs, the most capable people in the country. And that I think is having an impact on the broader business and economic outlook there. And it's a big problem. So again, circling this all the way back to the beginning with liquidity, I think this bears close watching, and some of the people who are most bullish on crypto and Bitcoin, it's because they think that eventually, sooner rather than later, the Chinese leadership is going to cave in and dump liquidity into the market because the economy is not doing well. They stopped reporting employment figures because they were so bad. The college graduates, the unemployment rate there is over 20% right now, and they realize that if they don't fix that, they got a big problem on their hands. And so it all comes back to that.
So there's a lot of gloom and doom, but Kevin, did you go to Abu Dhabi last week? I heard there was a big party. It was like the Davos of crypto, right?
Yeah, well, Abu Dhabi and Dubai are absolutely booming. There's no question about that. And a lot of the crypto businesses have moved there because they've set up a friendly regulatory regime.
Sounds like it.
Yeah.
So I saw that the guy that just got pardoned by Trump, the Binance guy, right?
Mm-hmm.
He gave a presentation and he came across the stage wearing orange glow high tops that written on the bottom, Trump, crypto president. And everybody liked that. And then our guy from strategy now, not only just MicroStrategy, but strategy, he gave a presentation and he put up a slide that had a rocket being fueled by Bitcoin that said strategy on it. And it was like a $20 trillion trip, question mark, exclamation point, question mark. And people like that too. So it seems like the bulls
are very subtle.
No. With all this bad news, you would think people are a little down in the dumps, but apparently not. The bulls are still bullish.
Yeah, and just a little side anecdote. These crypto conferences are where much of the real gold mine is because
I saw that. They said they were trying to find the guys that worked for the big investment fund in the Middle East. All those guys were lurking about in that conference. So the big thing was to try to get them and sit down with them and get money from them, I guess.
Yeah, and even the companies that are not raising money anymore, the crypto projects that got funding in 2017 or 2018, they raised so much money back then that they are sitting on such a big treasury in their companies that they don't even have to generate any revenue going forward because they have such a big stockpile. And so some of these companies have like a 20 or 30-year runway. Which is absolutely crazy. Runway means, so for a venture financed company, how much cash do they have on hand? How long can they operate before they need to raise more money is basically what that means. And in crypto land, they're not going to have to raise more money, even if no revenue ever comes in. And these guys just jet around the world on their company dime, the project that they raised money for, going to these conferences. It's basically just an excuse to network and party.
Sounds like a great job. I think Eric and I had similar times about 2006, 2005. There would be this massive bond conference every year. They switched it around like the Super Bowl every once in a while. I remember one year it was in the Bahamas, but then it kind of got a good foothold in Vegas. And a few years later, we went out with our film crew in what was called a vlog, I guess, video blog, not a podcast back then. And we actually covered one of these conferences after the world blew up. And we couldn't believe they were still not only still having this thing, but people actually went. But there weren't that many. There were like 10. So hopefully that doesn't happen to the crypto gang. But that usually was the top. It was the sign of the top when everybody's still having a grand old time partying and what could go wrong, what could possibly go wrong. Yeah, that's usually a sign.
That was great. Wasn't that I think it was the end of 2000. So it was ASF, the Asset Securitization Forum. That would have been, I think, very early 2008, right? Because that was when the Giants, the Giants were in the Super Bowl.
Blown up. Yeah.
Right. We went out there and we went to, I think it was at the Bellagio. And remember, we went to all the meeting, like we went to all the different meeting rooms in the Bellagio, and where 2 years ago there were lines around the corner to speak to all the CDO managers, the collateralized debt obligation managers. And we went, and there was nothing, like literally just crickets. And, and a few of our friends saw us, and then when they saw the camera, they ran away.
They scurried. Yeah.
Yeah, that was fun.
So speaking of that, so Richie, you had some interesting stuff to talk about with Elon and data centers and.
Yeah, so I came across this article. I think it was you ever see these? They're really pitches for some guy who's trying to tell you to buy some stock, but some of them do have a good story, and this was one I got today, where tied into the SpaceX IPO. So people are hearing about this now. Like people were a little surprised that Elon would need to do an IPO for SpaceX, but he's apparently going for it. Next year sometime, trying to raise $30 billion with a B to give that valuation of that company $800 billion with a B. Hasn't done anything public thus far, no IPOs. And the gist of the article was he's going to use this initial money, all next year, not some pipe dream 10 years from now, 15 years from now. He's going to send up rockets that are going to be basically floating data centers out in space. Mm-hmm. And it's powered by the sun. And there's no pain in the ass local, city council telling them you can't build a data center here, or you can or you can't. He's just going to throw them all, and he's got like zillions and zillions of satellites out there, right? Like that Starlink thing. So like last year, 6 months ago, Motorcycle Man with his jacket winning all the love.
Jensen Wang
at NVIDIA. He called this thing a dream. Basically, because if this does happen, all this stuff in the US, gone. Like, and the article went into like how many, like if these guys all want to fulfill this data center electricity, just talking now, it is 1/3 of the output of the entire country already. Like electric output. So like, how are you getting there? Like there isn't enough, this and that and the other thing for all these things to be promised. And meanwhile, this guy who did the electric cars, he's ready for business up in space in like June. You want to play? You need data centers? And basically they said that Elon's going to knock everybody out.
Kevin, didn't you have some insight on that? They're missing certain materials to do something of that nature?
Yeah, I have not dug deep into it, but some people I respect were talking about this and saying that the one thing that there's a big shortage of in this scenario is silver, because the photovoltaic arrays, I guess, on that capture the sun's energy. Silver is a key component of that. So, I mean, it makes sense.
If you look at the charts on silver, guess what? It's an all-time high.
To the moon. And, but it makes sense. If you could have 24 hours a day, 365 days a year, constant energy because it's in space and the solar panels are pointed at the sun. Obviously, they don't have to pay any cooling costs, which are a big thing for data centers. So, betting against Elon has not been a winning trade ever.
And I think
So,
like, and
let's see.
everybody, got on him for the Tesla stuff, and like he's not paying attention. He probably isn't, right? He's like electric cars are probably like the last thing on his to-do list these days, right? He's just happy with his other businesses.
Right.
And I did see too, as part of this, I guess, is the Open AI guys, Sam Altman. He yesterday said vesting is no longer a thing in his company. So basically, what that means is it used to be about a year. So if you came to work for Sam or a lot of these other AI places, you got a ton of stock that didn't vest until a year. So you had to either be there for a year or they didn't fire you in a year, and you had to hang on. A couple months ago, when all this movement, like Facebook was grabbing OpenAI people and all that jazz, a lot of them shortened it to 6 months to entice people to come. Like, don't worry, if it's not working out, you can sell your stock in 6 months and be out of here. No harm, no foul. Yesterday, Sam Altman said, you come to my place, there's no vesting time. So that would be great, right? Like you get a job at Sam, he gives you a bunch of stock. The next day you sell it all, and then you go quit and work for Zuckerberg anyway. But that's the kind of thing that's going on now. So like all these guys are jumping over each other to find the talent to race to whatever. And they said that at Facebook, the new guys that he hired, Zuck, all are fighting with the legacy people. So like there's new sheriffs in town and everybody's pissed off.
They're going to get rid of all the metaverse people?
Yeah, I guess so.
Yeah.
I guess that project's over.
Yeah.
I don't understand how that is going to work out well for them. We're immediate vesting because, those are the handcuffs that keep people in a company. I mean, I'm sure you guys, we all back in our bank days, you have deferred compensation and other things. So, you can't just take your check and bounce to the next bank and play musical chairs every year. But
so I don't know if that means that other, rivals to OpenAI are going to do the same thing. Maybe they will. Maybe they'll all just be a mess.
Well, it's interesting. So I think I was telling you, Rich, I think Sam Altman was being interviewed on Thursday on CNBC. We were sitting on the floor watching it. And because I never really watch CNBC unless I'm on a trading floor, which I think that's the only place anybody watches that. But anyway, Sam Altman was being interviewed, and I turned to the guy next to me. I said, he is trying so hard to look and sound like a human being right now. I mean, literally, you could see he's physically thinking about it, like make eye contact, speak in a clear voice. And I guess to segue a little bit, I love Tim Dillon's a favorite of mine. I listen to his podcasts every week. He's pretty hilarious, but he's really on the money. And he talks about these people, the Sam Altmans, the Jensen Wangs, the Larry Ellisons, all these like 10 people who are basically making the decisions for all of humanity. And they're not human beings. Their plan is to either have humanity, and by this I mean themselves, to merge the technology with the humanity and create this new thing, and then to get the hell off the planet, which is the next thing. And
Kimmel's back in the news too. Did you see what he said?
No.
It's a Time magazine cover or something. He called it the 8 dorks of the apocalypse. 8 dorks of the apocalypse. And it was all those guys.
And just to drive the point home this weekend, and Kevin, I think you had one too, where I was reading that Chinese billionaires you can't have a surrogate to have a child in China. They don't allow that. So they're coming over to the US and it's big business. And all these guys they're having their seed impregnate a healthy, brilliant woman, I guess, in the United States. And they all want to have 50 to 100 babies. And the one guy they focused on, he only wants male, like Luca Brasi. He only wants a male child, and he wants 30. He wants 30 boys, which I don't know what happens with what happens when one comes out a girl? I don't know what the answer is for that. But essentially, he wants to put then those 30 into like a death match to see who succeeds him, right? So it's
Oh God.
like if Kim Il-jung, you remember the dynasty in North Korea where they all kind of have to fight it out as to who's good, and if you don't win, you're dead. Like there's no second or third place. So
Wow.
I just these people are psychopaths,
Yeah.
and I guess robber barons always kind of were, right? I mean, they're definitely it takes a certain person to be able to do what they do, and a lot of it has to be just ruthlessness and but
Well, it
as
takes a certain person not to quit because 99.9% of us, you get $1 billion. That's it, man. You're buying an island, you're buying a boat, you're not working 20 hours a day anymore. But
right.
the guys who get to that point, Elon, they're just wired differently. And he famously is very productive with his offspring. Uh,
Yes, 14. Well, they said that they are emulating Elon. That is one of the things that he kind of
Not
showed them
Philip
the way.
Rivers,
What's that?
not Philip Rivers,
Yeah.
the NFL quarterback with his 10
He's
kids.
a granddad. He's a granddad.
Yeah.
That was incredible.
Yeah, there's another guy who is, if you know the Telegram app that I'm
Mhm.
sure many people have on their phone, the creator of that, a guy named Pavel Durov, also has publicly admitted that he has fathered 100 children with by with surrogates. He has 6 children through 3 different wives or girlfriends. But then he's, got another 100 kids from basically women he doesn't even know.
Hmm.
And he said he's going to leave them each the same amount of money from his fortune when he passes on. But then, I'd say the Venn diagram overlap
Hmm.
between these people who want to have 100 children and those who are also investing heavily into life extension technology, that's got to be almost just a perfect circle because they all want to live forever as well.
Right. Um, so switching gears a little bit. So we had the Fed last week. Maybe talk a little bit about the Fed. So the Fed did what they said they were going to do. They cut the rate 25 basis points. They came out. They also, like we just spoke of, they started a form of quantitative easing again. They said they're going to buy 40 billion of Treasury bills. And you got to remember also that right now the U.S. is funding. We're producing a lot more Treasury bills. We're borrowing more on the front end of the curve. So to some degree, it is to keep liquidity, like Kevin was spoken of before, to keep liquidity into the system, if you will, because before that, and again, what I always say is that this is the plumbing, all right? This is the plumbing, the financial plumbing, and just like in your house, for most people, the only time you hear about the plumbing is when something goes wrong. Then all of a sudden you have to learn about the plumbing. Well, it is a little frightening when we have to when the average person needs to learn about the financial plumbing. But anyway, so the Fed did that, and then the press conference was very interesting because Powell he kind of talked from both sides. He said that it is that basically the bar is pretty high now for further cuts in 2026. The Fed, they call it the dot plot, where all the Fed, not just the vote. There's 12 voters, and then there's seven. There's also then I think there's seven that are not. I think there's a total of 19 governors and then Federal Reserve Bank presidents around the country. So pretty much the Fed, if you looked at the median, they all put in their expectations of where they think the funds rate, that's the Fed's policy rate, is going to be at the end of 2026, 27, 28. And the median was really just one more cut. And that, and the market right now has, I think, two cuts priced in, but pretty much a Fed on hold is kind of the message. And then Powell spoke and he talked about that the bar is pretty high. They can definitely sit now and wait and watch the data come in. But he also said, this was very interesting. He said that looking at the employment numbers over the past year, 2 years, 3 years, however long they're looking back, that they feel that the numbers may have been overstating employment jobs added every month by about 60,000 each month. And so in reality, we actually could be losing jobs over the course of 2025. And that all is based on the Fed. The Fed has something called the birth death model. I shouldn't say the Fed, the Bureau of Labor Statistics, the BLS. And essentially what they try to do is they say, well, we have a good feeling, we think, when a company fails, and people are now become unemployed. But we really don't get any heads up when a new company comes on. So the birth is a new company and replacing employment from the old company that died, which is an incredible, I mean, it's a total, it seems like, I don't know how you'd model that, but however they've been modeling it, I think the Fed's taken a good look at it and said this is this is overstating. Probably they're overcompensating the birth for the death or whatever. So you can imagine, and he also said, I think when he spoke about inflation, he repeated tariff inflation a number of times. So the man at 1600 Pennsylvania Avenue, upon probably watching this conference and hearing him talk about that there's actually been negative job creation, he's not going to cut rates probably at least the next meeting where he's still in charge, and that inflation is being caused by tariffs. President Trump called Chairman Powell a stiff and oh God, what was a stiff and it wasn't a dickhead. It was, I don't know, deadhead, close, deadhead. So we had that. So I mean, do you guys have any thoughts on about the meeting or just about the Fed in general?
I think they're probably did you see that move they pulled where they voted for each other unanimously to stay on? So that was like a coup. So like Trump actually wanted to change that with the new regime coming in 26, where guys had to live in the area, guys and gals had to live in the area where they were Fed chairman or
Bank
Fed
presidents,
bank,
bank presidents.
bank presidents, and they could only stay on for 3 years. So these guys in the last meeting on the QT came out and said, okay, everybody, you're all good for the next 5 years. We voted. Everybody said, yes, yes. Any nays? No? Okay, great. Bang. So that is going to piss Trump off immensely. That's got to. I mean, they're going to try. That'll go to the Supreme Court. Something will happen there. But that was like interesting. They did that. But I think they, I don't think he's really swayed by Trump. And I think he's going to, he'll look at the data but I could see them doing just one next year. And that's going to be a problem because historically, I think too, like the midterm election year is usually bad for stocks in general, because people know there's going to be a change of some sort. And also that, not to go too much into politics, but only Clinton in 98 and Bush in 2002 gained seats for his party in a midterm election when they were president. So it's hard no matter who you are. And I'm telling you, if the stock market crumbles or has kind of a drawdown, and now we're into 3-year bull market in stocks here in the U.S., there's going to be big change, right? Like that people vote with their pocketbooks, right? That's it.
Right. Well, what's interesting is I just saw, and disclosure, I worked at Freddie Mac, is that kind of quietly, Freddie and Fannie have been buying mortgages again. Back before they blew up, pretty much Freddie Mac and Fannie Mae were like two insurance companies. They did basically the credit protection on mortgages that then went into mortgage-backed securities, and investors bought them. That was called that was called their insurance book or their guarantor book. And then they had a hedge fund where they combined, they had about $1.6 trillion of mortgage-backed securities that were funded by a very small amount of capital, and they were funded by they go out and they issue debt, and they issue callable debt, straight debt, with straight maturities, callable debt, and that's how they funded it, and that's how they made a lot of money until they didn't in 2008. And the portfolio wound down a lot, and then I think a cap was put in of about 300 billion combined that they can hold. And they said quietly, all of a sudden, they're starting to buy mortgages again, like not guarantee and send them off to the end investor, but actually, I believe they'd have to come to the street, or they can actually, there's a number of ways that they could accumulate mortgages and mortgage-backed securities. But they said they've bought about 50 billion in the last 5 months, which isn't a lot in the grand scheme of things. But the thought potentially is that they need the mortgage rates to come down. They're trying to get the housing market going again. And if you all of a sudden the big buyer comes back, which would be Freddie and Fannie to any extent, well, all else equal, that would lower the yield on mortgage-backed securities, and that lowers mortgage rates that you and I see. So I think there's a lot of kind of maneuvering, and all of a sudden, remember, everybody, especially in the Republican Party, was that it's about free markets, right? Like, we got to get rid of Freddie and Fannie, we got to put it into the public, private markets, put it, make them public companies again where the government's out, except when they need them. Now, all of a sudden, no one's being so much of a private market person there. Hey, we have that lever to try to lower mortgage rates. Let's do that, and we'll worry about the consequences later. So I thought that was pretty interesting, kind of along what you're saying, Richie.
Mm. Yeah, it'll be interesting. And then Jamie Dimon popped in yesterday saying he likes Kevin Warsh. Is he like gonna bring the money for him or what? So and then the Barron's cover story this weekend was Kevin Hassert's. So Kevin Warsh and Kevin Hassert seem to be the two favorites to run the Fed next, instead of Powell, when Powell quits. And so Dimon came out and said Kevin Warsh should be a great pick. I have no idea where that was coming from. Why? I don't know if they are neighbors or your kids went to school together. I have no idea. But Barron's also put out an article, cover story, that Kevin Hassert, the other guy, the other Kevin, they're not so sure. His old colleagues, some of which remained anonymous, are not so sure he can stay politically neutral if he's given this new job. So I don't know why they had to put that out there either. So there's some kind of subversion, I guess. I don't know. But they were basically saying, like, yeah, he's going to be a Trump puppet. Like but I don't know. I mean, he in the past he wasn't, right. He worked for Bush, younger Bush. And he's, he worked as a conservative think tank guy or something. But
yeah, the Fed, I mean, look, the Fed is still a very collegial body. And I mean, unless somehow Trump figures out a way to get a third term, I mean, by the time all this happens, there's 2.5 years left, and he's out. You have like you just said, they just renominated all of themselves back in, because right now I think the governors. So if you're on the board, the Federal Reserve Bank board, right? Those are the guys in D.C. or that's where they meet. The governors, there's 7 of them, and they have 14-year terms right now. So a lot of them are there. The bank presidents, I think they have 4-year terms. And it's very rare that a bank president resigns. I mean, unless they resign on their own because they've had enough, or in case they were caught doing insider trading, like a couple of them did back in 22, I think, and they had to resign. But other than that, you still got to get along with everybody. You can't, and again, you're one vote. And the other thing is, you don't want that. What if you're the guy, you become the Arthur Burns, the infamous Fed chairman in the early 70s, who basically did what Richard Nixon told him to do and helped. Certainly there's a lot of other factors, but he helped really spark the greatest inflation that I think we've ever known in the 70s and the early 80s. So nobody, I mean, they're not going to want that legacy if they, you know what I'm saying? And again, you have to live with these people, you have to work together. And that's kind of why I think they have it the way it is. So I think a lot is being made of, that whoever is in there is going to, all of a sudden, Trump's going to get easy money just because Trump wants it.
No.
I think people are leaning a little too heavily into that.
Yeah. Everybody gets a vote, right? I mean,
right.
I mean, not everybody, but there's enough votes where the chairman can try to steer people, but, they can.
And they rotate. It's like the bank presidents rotate when they can vote every year that they.
Right.
So there's guys that right now aren't voting, gals that aren't voting, but next year they're in. So that you have to kind of play that game too.
Mm.
Okay. Well, have a, I think we've covered a lot here. Um, and anyway, it's okay. So, good stuff. And, we'll see you all next week.
See ya.
Bye bye.
And we're out.
We'll do it live.
Well, that was a little less structured, but okay, right?
No, I think it was good.
Yeah.
Yeah. Yeah. All right. I gotta write it. I, I like my brain is frozen trying to write art. I've been trying to start. I was going to talk a little bit about this, but we did. I was going to show maybe the next time. I got a little chart up. I'll show you. I wanted to show people this. Share. Sweet. I did want to show people what we were talking about a little last week about what volatility does to.
Yeah, because there was an article on this yesterday in the Journal, I think, about how people just get fucking buried
Yeah.
in single stock, 2 times leverage and 3 times leverage.
Yep.
And there was a line that was like perfect. It was like something like, yeah, I think these are marketed to people who are very naive and don't know what they're getting into. Like that. And
Yes.
that was like a professional, it wasn't like, somebody off the street.
Maybe we should turn the podcast back on.
What's the borrowing cost if you want to short these things?
Exactly. It's
Do
hard.
you like short both sides of it? Like short the 3 times
Yes.
levered long and the 3 times levered short? And now
Probably
you're
could.
like, how does the math work in that?
I don't know, but you got to figure there's always another side to the trade, right? So this is like, oh, I was going to say, I should have brought it up. In the Financial Times yesterday, at least, so South Korea, if you're going to buy these things in the US, but you're in South Korea, you have to take a mandatory 1-hour training course.
Yeah, I saw
on
that.
this, on this stuff. And if you pass the test. And I think this actually, they almost do like a mock trading session too.
Yeah.
Yeah. What would you do now? What would you do now? And if you pass, then you get a special number. And then anytime you go to buy one of these things, you got to put that number in. Otherwise, it won't allow you to do it.
And also the real steroid thing, and some places won't let you do it. I don't think Schwab or Fidelity, but I'm sure Robinhood allows you to do whatever you want. They'll sell. Some of these have options. You can buy calls and puts on these fucking things that are like 3 times leveraged. Now you're talking like, if it moves up, you're poor or rich, and I'm sure people are doing it.
Kevin, weren't you talking about this intraday leverage now you can get on Coinbase?
Yeah. Very kind of them to send me that email. Hey, man,
on along.
If you're trading crypto, so we know you like cocaine, but here's some crack cocaine. Have you ever tried that?
It's really good.
Yeah. Which
right.
I would think it might be an interesting topic for a future pod where it follows on what you were talking about before of the 0-day options, Richie. Yeah. But just pointing out that like hedge fund, even the best traders in history, their win ratio is only like 53 or 54%, but it's how they manage their position and the risk around it. But if you're forced out of your position at the end of every day, even Paul Tudor Jones and Julian Robertson, they're not going to make money doing that. So if you're an algo fund, yes, you're trading in and out that fast, but I can't imagine people are going to make money on this shit.
Schwab has a definite hard on for these gambling things because the CEO now. So remember, I told you there was an article that they sent to me, like in their monthly newsletter, Schwab, like the differences between investing and sports betting, right? And the guy surmised that like in places that there's sports betting, 15% less is put toward buying stocks and bonds, which are the good thing, right? That's Schwab's business. So basically, stop gambling. Just invest.
Yeah.
The CEO yesterday, Schwab, came out and said, we feel like these young people are looking for the dopamine hit, right? And we will not have prediction markets like Robinhood. And he put a little a little jab at Vlad from Robinhood, because at their conference in Vegas, of course it was in Vegas, Robinhood's annual conference, Vlad got up in an F1 suit, and he's like, we're racing and racing and racing, right? You got to be fast and you got to win. And this guy from Schwab yesterday said, yeah, you won't see me getting up in an F1 suit. I have a gray suit.
Was that in the, oh, this is great.
How?
I've been trying to write an article on this, right? But it's kind of so big that I'm having like, I keep getting off on these, I'm getting off on these different tangents, because I want to, the focus of the article has helped me here. Like I was trying to I'm trying to say, look, why do we always eat our young? Why do we, whether it's Joe the Camel with or flavored vapes or cotton candy vodka or all this stuff that's aimed right at youth, right? And I would probably say that they are all that really as youngsters are probably more going for that dopamine hit, right? I mean, and the old, if you get them now, you gotta, you hook them now, you gotta
Right.
For life.
Like the whole TV thing, TV ratings, they all want the young people.
So, and then I started saying, well, let me, like with Robinhood, I mean, I was thinking about the levered ETFs. Then I'm thinking about, okay, levered ETFs and all the shit that they do, and the fact that they get you in, that they let everybody trade options, but without any kind of training or anything like that. And then, but then I start getting into all right, well, how did they make their money? So managing editor Greg, I was talking to him about it, and he goes, I don't know what's wrong with Robinhood. And I said, well, maybe nothing's because I like Robinhood. I don't pay any fees. It's great, and I don't trade that much. I said, well, okay, how do you think Robinhood makes money? If they don't charge fees, how do they make money? No idea. And I bet you 99% of everyone doesn't have an idea how they make it. It's payment for order flow.
Yep.
And like I looked up the 2024 stats, Robinhood, Schwab, Merrill, all the big brokerages, that they're paying Robinhood 22% more for their order flow, option order flow, than everybody else. Everyone else is like clustered around 40, 41, and then Robinhood's up there at 56. Why?
Yeah.
What is it about, their order flow that makes them more valuable than Schwab's order flow? And I think it's the youth. I think they look at this as this homogenous group. They all kind of move in the same direction. They move like herds. And I think that the Jane Streets and the Susquehannas, all of them are they're just studying it, and they're coming up probably with algorithms that probability statistic they can trade ahead of these guys. Do it before they do it. But then, what I'm saying? So it's like it becomes a kind of an unwieldy piece. Am I going after Robinhood or am I going after the whole thing?
Yeah. But I mean, they clearly. I'm sure, like Ken Griffin at Citadel gets about 100 tickets for the Super Bowl for all the gang at Robinhood, right? Like all the senior staff and all that. I mean, how much money Citadel must make just through their order flow.
Right.
So
obviously,
the clients of Robinhood are getting jammed on the price somehow, some way, right?
Like something has to give.
Yeah. So because when that order comes through, on that machine at Citadel, they're like, oh, Robinhood, yeah, that's their price. You're done. And at the same time, right, the same option, the same maturity, the same size maybe to Fidelity is a different number, because Fidelity's on the phone like, you give me that fucking price one more time, guy, and we're done. And whereas Vlad is like, yeah, bro, hey, we did a lot today. Yeah, I'm happy. Market's up. I'm going to the Super Bowl.
Yeah, right, good. Yeah.
So did you go? But speaking of events, did you go to Montana to see?
I did.
Yeah,
I did. And they're gonna fucking win this thing. Montana State's gonna win this thing because they blew out whoever they just played. And Yale, it came down to a Hail Mary. Like they had not, like, that Montana State offense is like ridiculous, and they scored 21. Yale lost 21-13. It was a great trip. The coach came in after like there was a main bar that all the events took place at before, after, and the guy the guy on the bar was a Yale alum, which was awesome. And the coach came in afterwards, after the game, Saturday night, and like shook everybody's hand and said, thanks for support.
Cool.
Yeah, it was good. It was good. But yeah, I was like, damn, man, they could win this game. Who knows? And yeah, Montana State won the other day, like 50-20. And so I think they play again at home. And then the finals in Nashville, I think, in January. But yeah, it was fun. Fast.
You're not going to see me in an F1 jumpsuit, and here's why. I think it sends the wrong message to young investors.
Yep.
What comparing investing to a race does is it teaches young investors you got to win today, you got to go fast, and if that stock's not going up today, gosh, something's going wrong.
Yep. That's the one.
Richie, you just wrote my article. Thank you.
Good. Yeah, that's I think he does say in that article he does say dopamine.
Yes.
At the end, he says they're all looking for a dopamine.
Well, last thing is, so yesterday in the middle of me trying to just rack my brain trying to do this, I get an email from ChatGPT.
All right.
Try this. So I go, all right, let's fuck around with this. I said, write an article like Eric Salzman from Racket News about this. And I was a little flattered because it came back to me and it said, hold on. Oh, I lost it. It gave me a lot of compliments. It said like,
you keep using ChatGPT.
yeah, like right, exactly. You're a genius.
I love this thing.
His style is so difficult to replicate. I don't know if my version is advanced enough. You got to wait for GPT-7.
Let me call Sam Altman.
Actually, it was funny because the description it gave, I said, well, it probably just sees Racket News and it's just reading Matt.
No, maybe not. You never. They said it would get a 93 percentile on the SATs. They've tested that already. I think 750 on both English and English. Something crazy.
But here's the crazy thing. It came back to me in less than 5 seconds.
I know. That's ridiculous.
Which meant it read fucking everything in Racket. I mean, it's fucking crazy.
Unbelievable.
Like I say, I'm glad I'm closer to the end than the beginning. All right, guys. Good stuff.
Hey, for next week. So I'm on the road from this Sunday until Saturday the 26th, I guess it is. So I can do a pod, but I would basically do it from my phone, which might be, I mean, it should have more or less the same background, but the audio quality probably won't be as great. But right. So just FYI.
Okay. Yeah, I got to travel Monday and Tuesday. So
okay.
We'll see if we can do it or not. Otherwise, we could push it a week.
All right.
Okay.
All right, guys. If we don't speak before then, Merry Christmas.
Merry Christmas. We'll speak. See you guys.